Hey everyone, welcome back to Corporate Decoder, the place where we see through the noise and find the real story inside those dusty corporate filings. Today we're looking at Cartica Acquisition Corp, and let me tell you, it seems like they've got a bit of a wedding to plan and it is taking longer than expected. Before we dive in, if you love getting these nonsense breakdowns of company reports, make sure you hit that subscribe button. And for even more exclusive insights and to chat with fellow corporate sleuths, join our Discord community, link is in the description below. Alright, so Cartica Acquisition Corp has filed this report of Form 8K, which is basically a heads up to investors about important events. Think of it as a company's way of saying, hey, something significant just happened and you need to know. This particular filing is all about a big deal they're trying to make happen, what they're calling a business combination. So what is this big deal? Basically, Cartica is merging with another company called NIDA Infrastructure Limited. It is not a simple one-step kind of merger. First, there is a plan where Cartica merges into a subsidiary of NIDA, and then that combined entity merges into NIDA itself. It is a bit like a corporate pretzel. This whole process is called the business combination. The goal here is usually for a special purpose acquisition company or SPAC like Cartica to merge with an operating business, in this case NIDA, and effectively take it public. Now, to make this business combination happen, Cartica needs its shareholders to vote and approve it. They had scheduled a big meeting for this, called an extraordinary general meeting, originally set for the 25th of November. But here is where things get a bit delayed. They've decided to postpone it. And why the postponement? They need more time to add some updated information to the documents they sent out to shareholders. Think of it like sending out an invitation to a party and then realizing you forgot to mention a key detail. So you have to send out a correction. This extra information needs to be included in what they call supplemental disclosure. The good news is, this doesn't change what shareholders are voting on, but it does push back the timeline. So, when is this rescheduled meeting now? It is going to be on the 4th of December of this year. And because the meeting is pushed back, they've also extended the deadline for shareholders who want to get their money back instead of participating in the new combined company. That deadline is now the 2nd of December. If you are a shareholder as of the 3rd of November, you are eligible to vote. And if you've already voted, don't worry, your vote will still count for the new meeting date. But if you haven't voted yet or want to change your vote, they're really encouraging you to do so as soon as possible. Now, this is all filed under other events, which is pretty standard for these kinds of updates. It is basically them reporting a significant development that isn't necessarily in the usual day-to-day operations. As with most of these filings, you'll see a section on forward-looking statements. This is a legal disclaimer. It means they're talking about future plans and expectations. But there are a lot of things that could go wrong, and they aren't officially promising these future events will actually happen. They list out a bunch of risks, from market changes to legal issues. That could mess up their plans. It is important to read these because they give you a snapshot of what could derail the entire deal. They also mention a registration statement. This is a big document that gets filed with the SEC. It is where they lay out all the details about the securities that will be issued as part of this business combination. It includes the proxy statement, which is the document shareholders get to help them decide how to vote. In essence, it is the comprehensive prospectus for this entire merger. They also give a phone number for their proxy solicitor, Advantage Proxy. If you are a shareholder and have questions about voting or redemptions, this is who you'd call. It is listed as 877-870-8565. Remember, you can always find these documents and more details on the CC's website. And there is a section about participants in the solicitation. This is just a heads up that the directors and executives of both Cartica and NIDA are considered to be involved in asking for shareholder votes. It is a standard disclosure to ensure transparency about who is trying to influence the outcome of the vote. So, wrapping up the main points, Cartica Acquisition Corp is updating everyone on its business combination with NIDA Infrastructure Limited. The shareholder meeting to approve this deal has been postponed to the 4th of December, with a new deadline for redemption demands on the 2nd of December. To allow for updated disclosures. Now, let's look at this from a pure investor's perspective. While this filing doesn't contain detailed financial tables for a specific quarter, like a 10Q or 10K, the story here is about execution and timeline. The postponement itself isn't a red flag from a financial health standpoint, but it is a sign of potential complexities or a need for greater clarity before shareholders commit. The fact that they need to supplement disclosure suggests there might have been some post-announcement events, perhaps market shifts or new information about NIDA's business that they feel require more explanation. This delay could also increase costs for Cartica. As SPACs typically have a time limit to complete a merger before they have to liquidate, the key risk highlighted here, and it is a big one for any SPAC, is the amount of shareholder redemptions. If too many shareholders decide to get their money back, it can leave too little capital for the combined company to operate effectively or achieve its growth targets. The ability to meet stock exchange listing standards after the merger is also a crucial hurdle. What we're seeing here is a transaction that is facing some logistical hurdles, namely the need for revised disclosures and the subsequent rescheduling of critical votes and deadlines. While this is common in complex M&A, it does introduce uncertainty. For investors, the critical takeaway is to pay close attention to the content of those supplemental disclosures when they become available. That will tell us more about what is driving these changes and if they significantly alter the investment thesis for NIDAR post-merger. The unknowns in the forward-looking statement section are worth noting as they cover a broad range of potential issues from economic downturns to competitive pressures impacting NIDAR. Alright, that is our breakdown of this Cartica Acquisition Corp filing. What is your take on this delayed business combination? Do you think the extra disclosure will be a positive or negative? Drop your thoughts in the comments below. If you found this analysis helpful, please give it a thumbs up. And if you want more of these deep dives into corporate filings, make sure you subscribe. Don't forget to join our Discord community for more discussions. Thanks for watching, and we'll see you in the next one.